Hello, folks, and welcome back to another episode of the Daily Crypto Byte. Today is Monday, April 18th. Hope you all had a wonderful long weekend. I know I had a very nice weekend. Went home, had some ham, saw the family. It was very nice. But back to the markets here today. It's a really big week for both, Bitcoin and the traditional equity markets. Lots of earnings this week. We'll talk about that and more, but also, continued increasing correlation between Bitcoin and traditional equities has a lot of people concerned here as we start the week. But we'll break down traditional equity markets, take a look at what we're seeing with Bitcoin as well, and then finish it off with some other crypto assets. Before we get started, CJ, how are you doing today, my friend?
Doing good, Monty. See you're moved in your new place. Very nice.
Yes,
Um,
yes, made the move here, but as you can see, still need to decorate a bit. But
look a little empty.
I got
Um,
my computer, got my monitors here. That's all I need. I'm ready to trade and ready to do the show today. So yeah, how are you doing, my friend?
Doing well, doing well. Hope everybody had a good holiday weekend. You had mentioned that we're going to have a lot of earnings this week. So I thought I'd start by just sharing a list of what we're going to see um, over here by Earnings Whispers. So Monday, after close, we have a lot of banking sectors, obviously Bank of America and a lot of others. Tuesday, we have some more tech names, including Netflix, as well as Silvergate. Notably, Tesla is going to be Wednesday after the close. That should be very interesting. And, some more tech as well as banking names throughout the rest of the week. So perhaps that could be a much needed catalyst for any type of bullish price action, but still has yet to see. This environment is very unique in the sense of how bearish the collective majority is right now. So we're going to go into some other metrics around that. But yeah. How are you doing, Monty? Anything you'd like to start with?
I think you put it well, CJ. Hopefully those earnings are a much needed catalyst because, like we started off the show saying, the correlation between Bitcoin and traditional equities is just growing stronger. And that's not necessarily a good thing considering the fact that we've been kind of clubbed over the head with kind of bearish after bearish news, whether it be, inflation data, consumer spending data, all of that kind of feeding into this macro narrative. But just taking a look at this increasing correlation between Bitcoin and the NASDAQ, as you can see, it is at all-time highs here. But one thing that is worth noting is kind of the similarity in, trajectory here that we've seen basically from the end of, last year into the start of this year and from, basically the onset of COVID until, about a couple months after COVID. This is that, that correlation tends to increase when the market, particularly the macro environment, is being driven by, lots of different factors, whether it be global conflict like we're seeing with Russia and Ukraine, or whether it be, the concerns around rates being raised pretty aggressively this year and just the overall effect that's having on the market. So, not too surprising given, what we're seeing from a macro perspective, but overall, I think it's pretty clear that we need to see traditional equities turn around before Bitcoin's going to, show any signs of strength. So, that's a bit discouraging, but like you said, CJ, lots of interesting earnings to keep an eye on. And in the past, those have acted as a catalyst to kind of get this market going. So all eyes will be on those earnings this week. Lots of big companies, like you mentioned, and hopefully that, gets the price action moving in the right direction a little bit.
Yeah, well, that seems like a good place to start, at least when it comes to charts. So why don't we jump into NASDAQ SPX? Because there's some interesting stuff that I think is worth going over from a technical perspective. I see one of our favorite friends, Bob, in the chat says 10-year is at its highest level in 3 years. That's correct. It looks kind of like an altcoin chart. Um,
Is that
Quite
Dogecoin?
powerful. Were you gonna say something?
No, just say it looks like it could be like Dogecoin or Sheeb after a Robinhood listing, but really it's just the 10-year being driven by those macro conditions that we were just mentioning. And like we said, when macro markets are moving this much, things tend to move, one to one. That's what we saw after COVID. That's what we're seeing now. But yeah, maybe the earnings this week could kind of act as a break from that correlation. We'll see.
Yeah. So I want to go to the NASDAQ very briefly here and just talk about where we are in terms of support and then what's going on with like divergence in some of these oscillators. So, an example of some bearish divergence that led to a reversal that we saw historically was previously in October when we had a slight higher high, yet we had a lower high and a severe drop off in the amount of bullish momentum. And as you can see, that led to a reversal, a subsequent lower high, and then a even sharper downtrend. And we saw something similar again continue when we had lower lows in the NASDAQ here, as well as higher lows in the RSI. And so we are at a very critical level here because we are testing now support where we initially found some at roughly 13,370 and bounce from that level. Now you're seeing the upward sloping line, or kind of that remnants of the bullish divergence on the RSI, trying to find support at this upward sloping level simultaneously as the trend tests some very critical support. Also, you pair this with horrible bearish sentiment, worst that we've seen, in fact, since 1994, and we can, or 1992, and we can go into some metrics about that in a little while. But I want to look at some of these relationships between assets, namely with the NASDAQ and tech assets, as well as the DXY. Many times we talk about like with nines and how if they don't occur at the bottom of the trend, typically it will take one or two more days or candles at least to then find some type of bottom. And I think that's what we're doing, at least in the short term. I'm not saying that we rip to new all-time highs or anything. All I'm saying is that I wouldn't want to be short at support at this level with the divergence, with the TD sequential buy 9 and the remnants from that, as well as if you would look up here, we are beginning to turn up from oversold levels, or we've been oversold for quite a long time now on the Stochh RSI. So in the technicals, it looks like a inverse head and shoulders pattern. That being said, if we close the day in another bearish engulfing candle like that, that's when you have to kind of think about, all right, maybe this inverse head and shoulders pattern is probably negated, and we're going to see some continuation to the bottom of this range. I think that's what a lot of shorts and people are betting on right now. But I think when we look at the relationship with the DXY and some others, it'll become even more interesting. So, uh, you know, very important that the trend holds support there for the time being. And that's a very similar story for the S&P as well as the Qs. In the Qs, this divergence and the support is almost even more pronounced. But I want to go to the DXY because we are in a very interesting set of circumstances. And I want to talk about divergence once again because what we saw in the S&P near the top in terms of a divergence is kind of what we're seeing now on the DXY. So if you look here, we've had consistent higher highs, very strong uptrend all the way to 100. Yet we have not made a higher high. We've made lower highs in the RSI ever since a price level of roughly 100 to 99. And now we are reaching that TD sequential sell 9. It did not close at the top of the trend. So, here are a couple more days of bullish price action. And we are overextended on the Stochh RSI as well. So when you take those factors into account, we can see these inverse relationships between the DXY and the S&P and NASDAQ and Qs are all reaching kind of extreme levels, so to speak. We're seeing divergence. We're seeing the TD sequential signals all flashing in like both of these asset classes. So that's very interesting. And, I think if I was long the DXY at this particular point, I would probably feel pretty good about taking some profits after being in a very strong trade. And I think you have to say the same with a lot of the shorts in the market in the S&P at the current time as well. So with that being said, let's get to Bitcoin and look at some of the price action that we're seeing. So we've broken down from this kind of little fractal that we had earlier and are now creating a hammer candle. This is not ideal of what we wanted to see, right? I haven't changed this upward sloping trend line in months, ever since we've found support, roughly in February at these points. But we've lost it retested it, and it actually acted as resistance, which typically, you don't want to see in terms of the strength of the bullish trend. But as you'll see again, we have starting to rebound from oversold levels on the Stochc RSI. Still have remnants of that TD9, but I think today's close really matters a lot, especially with those earnings coming up this week. It's going to be very critical. But if you see another bearish engulfing candle like that, something of that sort, I think then if we take out these lows, there's definitely a more probable situation that we continue to kind of this target area at the bottom that a lot have been calling for. I'm still a little bit more reserved. I'm not really ready to talk about those levels just yet, especially with all of the extreme sentiment that we're seeing to the downside. So that's a lot to do with Bitcoin. I also want to just highlight one support level before I pass it off, and that has to do with the Ichimoto cloud. And we've lost. We were hoping to find support, at least from the bullish perspective, but that has now been lost, and it's just not great to see from the bullish trend. Nonetheless, this is a very important support level for the bulls, and we'll see how those earnings shake out this week.
Yeah, absolutely. And one thing that you hinted at several times there is kind of investor sentiment or trader sentiment. And without ever having seen a survey, I would tell you that right now investor sentiment is very negative. You can tell that just from, the underperformance of speculative assets, especially relative to things like, the 10-year reaching its highest level in, 3 years, like Bob pointed out earlier. That to me tells me that, traders are risk off. Speculative investors are, keeping their capital on the side in the sidelines, or looking for bonds and safe yields. So, but I know that a survey came out. I know that you've been taking a look at that survey, analyzing some of that data from a historical context. So you want to talk about that a little bit and kind of where we're at from an investor sentiment perspective?
Yeah, sure thing. So there is a survey from the American Association of Individual Investors. And this survey has been going around since 1987. And since then, here are some of the historic averages and where we're at currently. So historically, we see an average of roughly 30% of the market participants in this individual investor survey being bullish on a consistent level. 31% are roughly neutral, and then you have the 30% that is roughly bearish, most of the time. So kind of equally spread out in terms of historical averages, even when we continue to trend up. Our 1-year high has been roughly 52%. And then the 1-year bearish high has actually been 53%, and that occurred in February of specifically the week of the 23rd. We are still at very high levels, considering we're at 48% of the current market participants are bearish, and then when you look at 35% being neutral, I'm sure those participants have hedged in some way or another, or have created a position where even if they are bearish or not bullish on the market, they're not going to get killed by some type of crash or recession and so forth. And then when you look, only 15% are bullish at that current point. So this is definitely the contrarian trade to be bullish at this particular point. And I like this article that it goes into some of this history of what we've seen when we've been at these extremes. So bullish sentiment, expectations that stock prices will rise over the next 6 months, decreased by 8%, or by roughly 8.9 percentage points to 15. And this is among the 10th lowest readings in the survey's history. Optimism was last lower on September 4th, 1992. And so basically what this report goes on to say is that, when we have these periods of extreme fear, you will sometimes see continuation to the downside in the short term on somewhat of a weekly basis. But over the vast majority of times where we've seen sentiment this bearish throughout history, on a 6 to 12-month time series in the future, typically we are at higher prices. So it's interesting to look at the historical data in that context, especially when applied to the sentiment. So not saying we can't go lower, But I think that in the next 6 to 12 months, people are going to be a little bit more optimistic about the future. But yeah, that survey was very interesting to see how extreme the levels currently were and where we're at.
Yeah, very interesting stuff there. So thank you for breaking that down for us. But I think this is setting up to be an interesting week of price action, but with investor sentiment at record levels, some very important earnings as well, and then you have Bitcoin retesting critical levels. So lots of stuff to keep an eye on. And I think Phoenix makes a good point here, and then I think that you were kind of making this point as well. It's usually the best time to buy when everyone else is selling the most. That's definitely historically true. It's even more true with Bitcoin as well. If you've been able to make the contrarian trade, buy when people are most bearish and sell when they're most bullish, you've been very profitable. So that's just something to keep in mind. But CJ, you seem to get some thoughts on that. Go ahead.
Think about how bullish we were collectively in December when Bitcoin was at like 65, 67K, when the entire world was hyper bullish. We thought 100K was merely weeks away. Now it's basically the inverse of that, where 25K is only weeks away. I've seen a lot of traders call for levels like 12K, and anything could happen. I will never not rule that out. But when these sentiment levels get to their extremes, it's time to pay attention and think about seriously what are the possibilities in the next 3 to 6 months, and whether or not these are long-term good bets. Because it always is interesting when sentiments are at extremes.
Absolutely. We tend to have, extreme volatility when we get sentiments at those extremes. So, another thing that could be a catalyst for price action as well. Lots to keep an eye on it this week. As always, CJ and I will be hanging out in the crypto community. If you guys would like to join us, you can do so at the link below me, markrebellion.com/try crypto. And please don't forget to like and subscribe. Really helps the channel. But that's all we got for today. Any parting words for our audience, CJ?
Um, Not particularly. Just thank you guys for watching. I hope you have a great day in the world wherever you're at, and we'll see you next time.